The printer man rugged us on Thursday. If you're new to this space, the sight of your portfolio might be shaking you up. Sorry to break it to you, but we'll see several corrections like this on the way up. Max pain is the price we pay here for massive gains. Staying prepared for both is what separates winners from the rest. Personally, I haven't given up on the Santa Claus rally just yet and have been actively buying the dip. In this video, I'll share my macro outlook and reveal the altcoins I'm accumulating during this dip. We'll also analyze some charts to see if the bull run is holding steady and discuss where the market could head next. Alright, let's get going. You're probably aware of why the market has taken a dive, so I won't dive into the details. The market seems to be overreacting to the Federal Reserve's announcement of just 2 rate cuts for 2025. However, this is actually a positive signal, demonstrating the Fed's confidence in the economy's ability to handle higher rates a bit longer. Gradual rate cuts are healthy for the economy, allowing for a smooth transition that supports growth without overheating. Lower borrowing costs boost spending and investment, setting the stage for a sustainable bull run. I see this dip as a huge opportunity. With so many gems on fire sale, I've been actively adding to my positions. While I wouldn't recommend going all in at once, it's definitely a good time to start dollar cost averaging. So, is the bull run still on track? Bitcoin is currently trading around $97,000 after dipping to $92,000 on potential government shutdown news. The Bitcoin Supertrend indicator is still holding strong, which is a bullish sign. This indicator tracks price and volatility to determine the market trend. As long as BTC stays above this key level, the bull run remains intact. The others chart is also showing strong resilience. It represents the total market cap of altcoins excluding the top 10 crypto. It bounced nicely off the 21-week EMA, a key moving average often seen as a benchmark for long-term trends. At the moment, it's holding steady around the $330 billion support level. This bounce indicates that altcoins were aggressively bought during the reversal, highlighting strong demand at these levels. Holding above the 21-week EMA confirms the broader altcoin market is still maintaining its bullish structure despite recent volatility. If this support holds, it could set the stage for the next leg up in altcoins. Bitcoin's dominance has climbed to 59%, meaning altcoins haven't taken center stage yet. The alt season index is sitting around 51, which shows Bitcoin is still the main focus, pulling liquidity away from altcoins for now. In short, yes, we're still totally on track for the next leg up in the bull run. This might be a good opportunity to DCA into high conviction altcoins as it looks like the bottom is in. What can we expect next? While it's impossible to predict with certainty, here's what I'm expecting. I see Bitcoin continuing its run, potentially reaching between $105,000 and $110,000. Let's hope there's no more political drama. Once it hits that range, we might see some consolidation. However, this could set the stage for the Christmas rally, where altcoins could have another solid run. This altcoin pump might last through the festive season. After the holidays, expect a shift. With the upcoming presidential inauguration, there's a chance of it sell the news event, which could lead to another dump across the board. I've talked about this in detail in my previous bull run playbook video, and I'll link it at the end. So how am I playing this? I've been buying the dip recently and adding to my positions. If we get a Christmas rally, I plan to take some profits into Bitcoin and brace for a potential correction after the new year. If Santa doesn't show up, I'll keep holding and look to buy more if there's another dip. In my earlier videos, I always emphasize taking profits during altcoin rallies. That's where having some dry powder keeps you sane. You can welcome dips as buying opportunities instead of panicking. Remember, no one has a crystal ball and crypto markets are unpredictable. The key is to be ready for any outcome. If you're scared of the dump, you're probably overexposed and banking on the market going up only. That's not how it works. Learn from this and make it a habit to take some profit when the market is overheated. If you're a long-term holder, you can simply ride through the dip and hold steady. Now, what am I buying? I have been accumulating Celestia during the dips as I believe it is undervalued. If you think high FDV is an issue, you should look at Filecoin historical data. It pumped to over $400 billion market cap last cycle. Monad's launch is one of the most hyped events right now, and it's all about scalability. While it's pushing the monolithic blockchain narrative, this kind of buzz has a ripple effect. People start comparing approaches, and that's where modular blockchains like Celestia and hybrids like Say could steal some of the spotlight. Because modularity offers its own exciting perks. Think app-specific chains and roll-up ecosystems. We've seen it before. When one big project launches, it brings attention to the whole sector. So if Monad takes off, expect modular chains to ride that wave too. I've been gradually accumulating from the $6.20 to $6.50 region and added more around $4.70 on the dip. I'm not expecting a 15 or 20x on this one. My plan is to get a quick 2 to 3x during Monad's hype rally and then rotate into lower cap altcoins as we move down the risk curve. Remember, it's not recommended to go heavy into lower cap altcoins during the initial phase of the bull run. During flash crashes they tend to get hit harder. It makes more sense to get a safe 2 to 3x on mid caps and then rotate some of it into lower caps during dips. I added some Near as well around $5.30 region. It should do well during the next leg up. Near has strong positioning in two of the market's hottest sectors, AI and Layer 1 blockchains. The project's founder, Ilya Polasukhin, has collaborated with NVIDIA CEO Jensen Huang on AI supercomputing research. This adds credibility to Near and enhances both its technical prospects and appeal to retail investors. When they show up, hype often takes the lead with tech taking a backseat. I believe AI will be one of the top narratives for 2025 and Near has the largest AI mindshare in crypto. I'm expecting meme coins to rebound during the next uptrend, so I've added some Popcat, Wif and Mog. I've added Ethereum to my large cap positions. With a potential reversal on the ETH BTC chart and a shift into a risk-on zone, I expect Ethereum ETFs to eat into Bitcoin ETF market share, which should drive ETH higher. I share most of my buys on Twitter, so follow me there for quick updates. Shout out to everyone who voted for this topic and I'll see you in the next one.